All right, today we're going to dive into one of the oldest and honestly one of the most powerful tools in any trader's toolkit, point and figure charting. It's a method that promises something every single trader is looking for, a way to cut through all the market noise and see trends with, well, stunning clarity. Let's see how it pulls that off.
So, have you ever just stared at a typical stock chart? You know the one, packed with candlesticks, volume bars, and a million indicators, and felt totally overwhelmed? It can feel like you're trying to find a needle in a haystack, separating the real trend from all that daily chatter. Okay, and check this out. This is what I'm talking about right here. On the left, you've got a standard bar chart for the S&P 500. It's busy, but on the right, that's a point and figure chart of the exact same data. See how clean that is? It's like night and day. It just filters out all those minor distracting price moves to show you what's really going on underneath. And that right there, that's the whole point of this technique. It's designed to help you focus only on the price changes that are actually big enough to matter. And it just strips away everything else. So how in the world does it work? So here's what we're going to cover. First, we'll look at how this gives you a totally different view of price. Then we'll learn its super simple language of X's and O's, and we'll even see how a chart gets built step by step. After that, we'll get to the good stuff, how to spot clear trading signals. And finally, we'll wrap up with the key advantages that make this technique so darn powerful. Okay, so first things first, we've got to wrap our heads around a pretty radical idea. Unlike almost every other financial chart you've ever seen, point and figure charts deliberately, on purpose, ignore one huge element: time. What we're looking at here is a study of pure price movement. The chart only gets an update when the price moves by a specific, meaningful amount. So if a stock just trades sideways for a week, this chart won't change one bit. It's all about price, not the clock. So this table really breaks it down nicely. Your typical bar charts, they're tracking price, time, volume, every little wiggle. But point and figure, nope. It focuses only on significant price moves, filters out all that noise, and uses these simple columns of X's and O's to tell the story. All right, let's get into the nitty-gritty, the actual building blocks. The entire system just uses two simple symbols, X's and O's. And the cool thing is, their meaning is totally controlled by two crucial settings that you, the analyst, get to decide on. So first up is the box size. This is basically your unit of measurement. Think of it like a ruler for the price. If you set the box size to, say, $5, the price has to move a full $5 to earn a new X on the chart. Then you've got the reversal criteria. This decides when a trend has actually changed direction. A 3-box reversal means the price has to move in the opposite direction by $15, that's our 3 boxes times $5, before we say, okay, we're in a downtrend now. And this is where you can really see the magic. It's so flexible. On the left, we've got a bigger 10-point box size. That gives you a long-term view with fewer but more significant signals, perfect for an investor. But on the right, a smaller 3-point box size is way more sensitive. It's capturing all those short-term swings, which is much better for a day trader. It's the exact same data, just seen through two totally different lenses. Okay, so we know the pieces. How do we actually put them together to build one of these charts? You know, it seems complicated, but building a basic chart is actually a very logical, step-by-step process. It's pretty straightforward, really. Here's how you do it. First, you set your scale. Again, let's say 5 points per box and a 3-box reversal. As the price goes up, you add an X for every 5-point jump, stacking them up in one column. You just keep adding X's as long as that uptrend is in place. But the moment the price falls by 15 points, that's our 3-box reversal amount, the trend has officially changed. So you just move one column over to the right and start a brand new column of O's heading down. It just keeps going like that, back and forth, X's and O's. And voila! This is what you get when it all comes together. Each column of X's is a clear, undeniable uptrend, and each column of O's is a clear downtrend. The entire history of that battle between supply and demand is laid out for you in this really simple, elegant format. Okay, so building the chart is one thing, but how do we actually use it to trade? Well, this is where the real power comes in, identifying these clear, objective trading signals based on really simple patterns. You know, the most basic buy signal is so simple, it's brilliant. You're just looking for a column of rising prices, a column of X's. When that column of X's rises one box higher than the top of the last column of X's, boom, that's a simple buy signal. It's telling you there's been an upside breakout, and it suggests that demand is winning the fight and the price is probably headed higher. And you guessed it, the sell signal is the exact mirror image. When a column of O's, falling prices, drops one box below the bottom of the previous column of O's, that's your sell signal. It's a downside breakout. It suggests supply is now in control, and you might want to watch out below. But, of course, it doesn't stop with just the simple stuff. Those breakouts we just talked about, they're the foundation. You can see them right on this chart, labeled B1 for a buy and S1 for a sell. But beyond that, Point and Figure has this whole rich library of more complex patterns, things like triple tops and triangles that can give you even stronger signals to work with. So you might be thinking, why should I care about a technique that's been around since before computers were even a thing? Well, the answer is simple. Its core advantages are absolutely timeless. Let's quickly sum up why it's still so effective today. First up, its flexibility is just incredible. You can tailor these charts for stocks, futures, crypto, for long-term investing or short-term trading, just by tweaking those two settings. Second, the signals are so precise and objective. A breakout is a breakout. There's very little room for debate. And finally, and this is a big one, that objectivity helps foster discipline. And look, don't just take my word for it. The source material puts it perfectly. By following these specific point and figure signals, better trading discipline can be achieved. When you have clear, unemotional rules for when to get in and when to get out, it helps take all the guesswork and, more importantly, the emotion out of your decisions. So there you have it, a method that's all about filtering out the noise, identifying clear trends, and giving you objective signals. You know, at the end of the day, Point and Figure isn't about predicting the future. It's about understanding the present battle between supply and demand with a whole new level of clarity. The only question left is, could this century-old technique be your new trading edge?